The Japanese yen, a tug-of-war between inflation and policy uncertainty. The Japanese yen, JPY, is currently navigating a complex landscape, experiencing fluctuations driven by a mix of economic data and central bank outlooks. This Friday's release of Tokyo's inflation figures, showing a faster-than-expected rise, initially bolstered the yen, hinting at a potential imminent interest rate hike by the Bank of Japan, BoJ. This, coupled with a renewed interest in safe haven assets, helped the yen recover some of its recent losses. But here's where it gets controversial. Conflicting signals from the BoJ and other economic factors are creating a seesaw effect. Tokyo CPI data fuels yen's short-lived rally. The Tokyo Consumer Price Index, CPI, a key indicator of inflation in Japan's capital, showed a notable increase. The Internal Affairs Ministry reported that the overall CPI in Tokyo rose to 2.8% year-over-year in October, up from 2.5% the previous month. The core CPI, which excludes volatile fresh food prices, also climbed to 2.8% year-over-year, from 2.5%. Even more significantly, the core CPI, excluding both fresh food and energy prices, remained above the BoJ's 2% target for 3.5 years, also reaching 2.8%. This data provides a compelling argument for the BoJ to gradually increase interest rates, which, in turn, offers a modest boost to the Japanese yen during the Asian trading session. BoJ's dilemma, rate hikes and economic pressures. The BoJ's recent actions and statements paint a picture of uncertainty. Despite the inflation data, the BoJ held interest rates steady at the end of a two-day meeting. Interestingly, there were dissenting votes from board members Naoki Tamura and Hajime Takata, who favored a rate hike to 0.75%. BoJ Governor Kazuo Ueda's comments during the post-meeting press conference further fueled the ambiguity by stating that there are no set plans for the timing of the next rate increase. This indecision is further complicated by factors such as the new Prime Minister Sanae Takaichi's pro-stimulus stance, which could lead to a delay in raising interest rates, potentially acting as a headwind for the JPY. Simultaneously, the US dollar, USD, is drawing support from the Federal Reserve's hawkish stance, which could limit losses for the US dollar to Japanese yen pair. The US dollar's influence and technical outlook. The US Federal Reserve's hawkish tilt is also influencing the market. While the Fed lowered its benchmark overnight borrowing rate, the chairman, Jerome Powell, indicated that further reductions in the policy rate at the December meeting are not guaranteed. Traders responded by scaling back their expectations for more easing this year, which pushed the USD to its highest level since early August. The US dollar to Japanese yen pair also reached an 8-month peak. Technically, the US dollar to Japanese yen pair shows signs of potential dip buying at lower levels. The breakout above the 153.25 to 153.30 region and the 154.00 mark has encouraged the bulls. The oscillators on the daily chart remain in positive territory, suggesting further potential gains. Support levels are seen at 153.30 to 153.25, followed by the 153.00 round figure. If broken, the overnight swing low around 152.15 could be exposed. Resistance is seen in the mid-154.00s, with potential to reach 154.75 to 154.80 and the 155.00 psychological mark. Economic Indicator Spotlight, Tokyo CPI. The Tokyo Consumer Price Index, CPI, is a crucial economic indicator released monthly by the Statistics Bureau of Japan. It measures the price changes of goods and services purchased by households in the Tokyo area. The index is a leading indicator for Japan's overall CPI, released weeks before the nationwide figures. The core CPI, excluding food and energy, is used to assess underlying inflation trends. A high reading is generally bullish for the JPY, while a low reading is bearish. The latest release, on October 30, 2025, showed an actual value of 2.8%, exceeding the previous reading of 2.5%. In conclusion, the Japanese yen's trajectory is subject to various influences, from inflation data to central bank policies and global economic factors. The Tokyo CPI figures provide a boost, but the BoJ's cautious approach and external pressures create uncertainty. What do you think? Will the yen strengthen further, or will these headwinds prevail? Share your thoughts in the comments below.